All right, so work together 5-3. Now, this is one of the first times we have to deal with a naughty person. I know, naughty. Okay, we're gonna pick on Sid. Sid's naughty, right? Obviously, we gotta watch out. So, what I'm talking about in section 5-3 is going to be an NSF check, non-sufficient funds. So basically, Sid comes into my business, she buys something, she writes a check to me, I take that check to the bank and it doesn't clear. Okay. The minute that I receive that check, though, what happens to in my books, though? I go through and I record it. Would you agree? So I'm going to go through at that point, I'm going to assume cash is going up, right? So it's not going to, though. So eventually what I have to do is I have to deal with the fact that I have a customer that wrote me a check and it did not clear correctly, so I have to go through and take care of that. So now if Sid wrote a check for me for $20 and it didn't clear, my cash has to go down $20, right? We'd agree cash would have to be credited $20. Now, am I only going to make Sid pay me back $20, though? We're going to make her pay me back $20 plus a fee. Would you agree? So we have to go through and account for that. So if I lower cash $20, and then I'm going to have to go through and deal with accounts receivable, and then we're going to have that on there as well. And then the bank is going to charge us a fee. So anytime we try to cash a check and that check does not clear, the bank is going to charge us a fee, which is why we charge Sid more than just $20. We have to recoup that fee. We're not looking at making money out of insufficient fund checks, but we have to recoup our costs. So if we think about that, basically what I just said, is this transaction going to take more than one line? Most certainly, okay? So we are going to have to deal with times that somebody may write a check to us where the amount does not clear. So on March 15th, we received notice from the bank of a dishonored check from Christopher Icola, $63 plus $10 fee for a total of $73, and that's going to be Memorandum 21. Okay? So let's journalize it, shall we? I think we should. So the first thing we have to do is we have to put today's date, or excuse me, the date of the transaction, which is the 15th. Now, how much is cash being affected? How much did Christopher write the check out for? 63. Would you agree? So we know, how much does Christopher owe us? 63? 73, right? Originally it was 63, so we have the fact that Christopher is now going to owe us $73. One second. So we're going to do accounts receivable, Christopher Icola. The source document is going to be M121. Would we agree with that so far? Okay. So, do we have more cash or less cash? Less. How much less cash? 73, because the original check was 63 and the bank took $10 off for the fee, so now we are less cash, $73. So how much does Christopher owe us? 73, so we have to do accounts receivable, Christopher Icola as a debit for 73. Now, transaction for March 16th. Paid cash and account to Spinoza Enterprises, $135 using EFT Memorandum 122. EFT, what's that stand for? I hear crickets. Anyone want to take a guess? No guessing? Good job on looking it up. That was a good guess. And it is a correct guess. Thank you. Electronic funds transfer. Instead of physically writing a check out, we are going to transfer funds electronically. Okay? Does anyone in here know somebody that may automatically have, like, their cell phone bill paid? They don't have to write a check out for it. Or your cable bill, any of those types of things, right? It automatically just gets taken out of your account. That's an electronic funds transfer. So basically, what we're doing is we're paying a bill, but our source document's not a check. So it's no different journalizing than if I paid cash for supplies, okay? But in this case, we're paying on an account to Spinoza using electronic funds transfer. So we know cash is going to be credited, and our accounts receivable is going to be, accounts payable is going to be debited, okay? So the date is going to be the 16th, and we're going to do accounts payable, Spinoza Enterprises for M122, 135, and 135, because I am paying a bill. So what we're really truly looking at right now in 5-3 are different ways of dealing with payments of accounts besides writing a check. And the 17th, hopefully we understand what a debit card is. I always think it's interesting because one of the first times we start talking about debits here in accounting, everyone automatically assumes it means a debit card. But again, the phrase debit in accounting just means left side of the accounting T account. So here we are buying supplies, and instead of writing out a check or using electronic funds transfer, I'm really paying with my debit card. Playing with plastic, okay? Not a credit card, but a debit card, because a debit card, the amount comes out of my account immediately. Credit card, I pay a bill at the end of the month, so they are treated differently. So here I'm buying supplies on an account, or paying cash for supply, buying cash using my debit card. Source document is going to be M123, so supplies are going to be debited $31, and cash is going to be credited $31. How's that? Pretty easy? All right, try that on your own. Section 5-3 is not very long, is it? Okay. Now, ideally, I could teach Section 5-4 also today, and then I would have the chapter done. I like to introduce small pieces and give you time to practice it. I have turned on the application assignment, but I want you to look at this outline, okay? I have purposely set up these outlines for you to be able to, when you go through and read and look at your book, it's very easy to complete. Okay, I've talked about it before, but I'm talking about it again. I have shared this with you in classroom. There are 4 sections in this chapter, 5-1, 5-2, 5-3, and 5-4. I just taught to you 5-3. Okay, when we look at this outline here, there are directions right here that some of you have failed to read. Okay, you need to outline the chapter for each one of these headings. So here's section 5-1, and within 5-1 you have 5 headings here. Below each one of these headings, you need to give me what? 3 bullet points. You read it, and you're going to find that this is really a heading you're going to find in the book. It's pretty straightforward. You're going to go through and give me 3 bullet points below that. Really, it can be bullets. And there's no right or wrong bullet points. You need to read and tell me 3 things that you learned from that section. Straightforward enough. The other thing that you need to do is you need to define the vocabulary. Okay? Vocabulary you need to put below the heading where it's introduced. So don't put them all right here. So you may have, on the bank statement, you're going to have like the phrase reconciliation. You're going to have outstanding checks. You're going to have outstanding deposits. Put those below your headings. And you're going to want to put the term in a different color. Just because that way it's going to be like, all right, this is vocabulary, not a bullet point. Outlining is not hard. You have time to do it in class. You need to bring your book. Got it? Your outline is going to be due on the day of the test. I will not accept it late. So, I've already taught 5.1, 5.2, and 5.3, which means you should have read 5.1 and 5.2 at least. Okay? There always are a lot of pictures within our accounting books, but you need to go through and read and then go ahead and work on this outline. I should not see anyone working on math homework, English papers that are due, science labs, accounting. Good to go? All right.
Five.